capital. It's always the number one question in biosciences, and how do I get money? How do I get funded? So, Virginia, I know you recently just closed a financing. Why don't you tell us your story, and what could you share with the audience that could help them go out and get that money they need to create their idea?
Thank you. We just completed our Series C financing, and we were able to raise a little bit over $5.3 million. And we were in a very fortuitous place because we have developed our product, patented it, gotten it through the FDA, marketed, and got to cash profitability. And we even had a hard time raising capital. So I think that your focus has to be on reducing the risks that investors see in your business by putting check marks in front of all those risks and getting them under your belt and behind you. And then the second thing I would say is to go out everywhere that you can and try to raise interest in your company. As I mentioned before, Solstice did participate in our Series C round, but I was able to get 2/3 of our capital came in from a private equity group based in Atlanta, Georgia, and 1/3 of the capital came in from a VC group in Michigan. And it was interesting because we are a revenue-producing company. I would speak to VCs and they'd say, you should go talk to private equity, and then I'd go to the PE guys and they'd say, you're too small, go talk to VCs. And then our capital came in really split right down the middle of the fence. And so our focus now of a company is to drive EBITDA, which is a new focus for us, because for the downturn in the economy, we really rubbed pennies together to make sure that we could sustain ourselves when we were operating on a pure cash flow basis for about 3.5 years. So now we're focused on using the capital and growing the business in a very rapid fashion in the marketplace.
Marie, I know your company is participating in Invest Southwest here pretty soon. Maybe share some of your thoughts about the process and getting ready to present.
Just to start out, I would say raising capital for a company as early stage as we are is raising it from the right people at the right time. Because it gets back to the risk portfolio profile that we have. So, we started out, of our $1.3 million that we have at this point in time invested in the company, over $500,000 came from founders. So it was real important to see early on that there was commitment from the people that founded the company, and that's really what sustained us a long time. The non-dilutive capital from grants represents another $400,000. So up till then, that all came either internally or from non-dilutive capital. And then the last little over $250,000 has come from angels. So it's really about time. Founders had to fill the gap in the beginning. It takes well over, it takes a couple years to get a grant. And so working on that all the time. So I see that on an ongoing basis, we'll always have to have about 1/3 of our capital coming in from non-dilutive grants to fund the R&D, because the investors don't want to fund that. They're open for funding commercial types of things. So right now we're in front of as many groups as we can. So Invest Southwest is in November, and we'll be presenting. We're one of the 6 Arizona companies presenting there. We'll be at the Mid-America Venture Fund, which is in November as well. And then we'll be out at the Life Science Conference out east. So, the process of Invest Southwest helped us prepare for all 3 conferences.
Raising money through angels. I'm a part of an angel group here in town. My partners are as well, and we've been a partner of that or a part of that for 4 years now. And I can say a little bit about, if you're looking to try to raise money from angels, there's a couple of things that you should be aware of. First of all, angels are going to want to see an exit in the 3 to 5 year time frame. They're not going to have, they're also going to be looking for capital raises on the order of, say, 1 to 3 million, something like that. So if you're thinking about your business and thinking about how to raise capital, be aware that for angels, if the runway is longer than 3 to 5 years to exit, and if the capital is, say you need $30 million to get to market, you're going to have a very tough sell to angels because they're going to be nervous. And if they put in the first money, they realize if you need a lot of capital that you're going to have to go for another round, and now they're going to see you go out and try to raise that other round. There's a fear factor that you won't actually get that next round, and they'll be stranded, maybe with a really good idea, but not enough capital to get there. So I encourage you, if you're putting together your business plan, if there's a way that you can structure it so that you get to early revenue, possibly an early exit, those are the things that are going to make your time spent in front of angel groups a lot more meaningful. Otherwise, if you do have a longer runway, a longer, higher capital intensive project, angels just may not be the place where you're going to actually be able to raise the money.
And Will, I know your company's in the midst of doing a little fundraising too. I want to share your thoughts about that process.
I really respect what Mark is saying about angel groups. I've raised $14.5 million over 6 years. And my kids always ask me what I do for a living, and I always answer, I used to be a scientist. Now I'm a capital funding guy. And our success has not come from venture capitalists, nor has it come from actual groups, but from individual investors throughout the state of Arizona, who I have always pitched, every dollar we return to you, I want you to put it back into someone's company in Arizona. And that's really the direction that we have taken. And on top of that, winning $3 million in grants. But it took us all that money to actually begin commercializing our blood test for breast cancer. And that you can see the TV commercials on that starting next Tuesday.